In today's Money Watch, we're talking about what's next for our economy. Later today, the Federal Reserve may cut interest rates again. CBS News business analyst Jill Schlesinger is here to discuss what this could mean for you. Jill, we're going to get to the Fed, but before we do, stock market rose off of the election outcome. What do you think was behind that?
It was a pretty sizable move, by the way. 2.5% to 3.5% or so for each of the major indexes, the Dow, the S&P 500, and the NASDAQ Composite. And, if you really want to boil it down, I think it's two issues. One comes down to taxes and the other is regulation. What a lot of people don't realize is we had Trump tax cuts that took effect in the beginning of 2018. But to make the numbers work, they had to say to the Congressional Budget Office, we're going to sunset individual tax rates, meaning we're going to leave them in place until the end of 2025. But at the end of 2025, they go back to where they were in 2017. And there's been a lot of concern that all of those tax rates that were cut would rise under a Harris administration. Now that you've got Trump reelected, we now know that a lot of those Trump tax cuts that we thought were going to go up, they're probably going to get enshrined for another 4 years. So low taxes is a big benefit when you're looking at investments. The other part of it is regulatory. When you have tight regulations for, say, the banking sector or oil and gas, it curtails profits for those companies. If you have a lighter regulatory touch, well, then profits for those companies could go up. So yesterday we saw the banking sector, all the different banking stocks, 10, 11, 12%. If you hate banks,
they're all happy.
They're so happy. They're like,
Right.
Thanks for that win.
Right.
So I think those two things together brought stocks higher.
So that's the short term, though. Could this be weakening for the economy or for the banking sector in the long term or medium?
I mean, look, we don't know what's going to happen. And I think that the other side of the Trump proposals that people are not really focusing on right now are those tariffs.
The tariffs, exactly. Which economists say is going to be bad for our economy, or what do you think?
Well, I mean, look, we don't know what they're going to be. We don't know how other countries are going to respond. If I look back historically, tariffs are generally not good for economies. Why? Because it sort of like raises prices for all those imported goods. And so if the tariffs are applied sort of clumsily, they can lead to higher prices. And I think that would shock American consumers, especially now that goods inflation has really gone down. As much as we complain about stuff that prices being higher, the trend is pretty good. If all of a sudden next year we get big tariffs, and at the end of next year we're talking about how dishwashers and the solar panels and electronics, and that things cost more, people are going to freak. So we don't know what those tariffs will be, but it could really lead to a higher inflationary environment next year.
All right, final minute. Interest rates, what's the Fed going to do?
Well, the Fed's going to probably lower interest rates by 1/4 percentage point today. They have one more meeting left in December. And I think that it's probable that they could lower rates again by 1/4 percentage point. But here's the key. If we do get those tariffs next year, this was a point of contention between the Fed chair, Jerome Powell, and then President Trump in 2018. Powell said, hey, tariffs, they're inflationary. We want to keep rates higher. Trump really put him to task on that. Powell kind of capitulated, cut rates in 2018. The president has been very critical of the Federal Reserve. I think what people are looking for is, well, what happens to Jerome Powell? Will he remain the Fed chair under a second Trump administration? He's got the job until May of 2026. So we'll see. But I think the Fed is on track to lower interest rates today, maybe again in December. We'll see how the economy reacts. If the economy's on fire and inflation stays high, Fed is going to leave rates higher for longer.
And the Fed's independent. The Fed chair is...
Yes, the Fed, this is an independent organization, but Federal Reserve board members are appointed by the president.
Okay. All right, Jill Schlesinger, thank you so much. And if you at home have a money-related question that you'd like Jill to answer, you can send her an email at askjill@cbs.com, and she could answer it in an upcoming segment.